Imagine it's the year 2010, and someone tells you that Bitcoin, then worth just a few dollars, is about to become a global financial titan. Most people laughed. They dismissed it as a passing fad, a digital experiment that would fizzle out. But those who listened, those who took action, changed their lives forever. Today, in January 2026, we are standing at a similar crossroads. But this time, it isn't about digital code or blockchain technology. This time, it's about something far more tangible, far more essential. We're talking about silver, the most crucial industrial and monetary metal on the planet. As we sit here right now, silver is hovering around $94 per ounce. To many, that might seem expensive. After all, silver has spent decades trading in the shadows, rarely breaking past $50. But here's what you need to understand. We are officially in what I'm calling the final countdown for silver under $100. The window is slamming shut before our very eyes. Once that triple-digit barrier is broken, and I believe it will be broken very soon, the silver market, as we know it, will change forever. The dynamics will shift, the game will be completely different, and those who hesitated will be left wondering why they didn't act when they had the chance. To truly understand why this is the last chance, we have to look at what's happening in the physical market. And what we're seeing is nothing short of desperation. For the last 5 years, the world has been running a massive silver deficit. We're not talking about a small imbalance here and there. We're talking about nearly 800 million ounces more silver consumed than mined. Let that sink in for a moment. 800 million ounces. The vaults in London and New York, the traditional storage hubs for precious metals, are being systematically drained to satisfy a world that is suddenly starving for silver. This isn't just retail investors buying commemorative coins or small bars for their personal collections. This is industrial giants, major corporations, entire industries scrambling to secure their supply chains. We are witnessing a historic short squeeze being led by the very industries that define our future. Think about the technology around you right now. Every AI data center being built to power the next generation of artificial intelligence requires massive amounts of silver for its high-end semiconductors. These aren't small facilities. We're talking about sprawling complexes that consume the electrical output of small cities. And every single one of them needs silver for the intricate circuitry that makes artificial intelligence possible. Every solar panel installed in the global push for green energy is eating up the supply. Governments around the world have committed to net zero targets, renewable energy mandates, and green transitions. All of that requires silver, massive amounts of it. In 2026, silver is no longer just poor man's gold, a label that always seemed dismissive and reductive. It has become what analysts are now calling the indispensable metal. The demand from the solar and electric vehicle sectors alone is projected to consume almost the entire global mine production by the end of this decade. Let me repeat that because it's critical. The solar and EV sectors alone could absorb nearly all the silver that comes out of the ground. And that's not even counting traditional industrial uses, electronics, medical applications, photography, or investor demand. When you have a supply that is shrinking year after year and a demand that appears to be infinite, there is only one possible mathematical outcome: a price explosion. Now, let's talk about what's been happening right now in January 2026. Some are calling it the panic of 2026. Just this week, we saw massive volatility as silver touched $94 before experiencing a slight pullback. But here's what's important. Don't let these small dips fool you. These are not signs of weakness. These are the last gasps of a manipulated market trying to hold back the inevitable tide. For decades, silver has been suppressed through paper contracts, naked shorting, and market manipulation tactics that have been well documented. But that era is coming to an end. Even Robert Kiyosaki, the author of Rich Dad, Poor Dad, and someone who has been right about silver for decades, is warning that the FOMO phase has begun. Fear of missing out. He's calling for $100 as the immediate floor, not the ceiling, the floor. And his targets stretch toward $200 in the medium term and even $500 in a hyperinflationary scenario. Now, some might say those numbers sound extreme, but consider this. When the smart money, the institutional investors, the hedge funds, and yes, even the big banks that have been shorting silver for years, when they stop fighting against it and start buying, you know something fundamental has changed. You know the end of the cheap silver era is here. Why is $100 such a big deal? Why does that number matter so much? It's psychological. Markets are driven by human emotion as much as by fundamentals. For over 50 years, silver has been suppressed, stuck in the shadow of gold, its more famous cousin. But something remarkable is happening right now. The gold to silver ratio is collapsing. Historically, going back thousands of years, that ratio was around 15 to 1. 15 ounces of silver to 1 ounce of gold. That was the natural relationship. Today, even at $94 per ounce for silver and with gold trading around $5,000, silver is incredibly cheap on a relative basis. If silver were to simply return to its historical relationship with gold, we wouldn't be talking about $100 per ounce. We'd be talking about $300. This is what some analysts are calling the catch-up trade of the century. For the global investor watching this unfold, the message is crystal clear. Every time silver has approached a major psychological level in the past, there has been a massive fight to keep it down. We saw it at $20, we saw it at $30, we saw it at $50, but the paper markets, the futures exchanges, the derivative contracts, they're all losing their grip on the physical reality. Physical demand is now the primary driver of the silver market. People are no longer trusting digital numbers on a screen. They want the weight of the metal in their hands. They want to hold it, to store it, to know it's real. Across Asia, across Europe, across North America, we are seeing premiums on physical silver reach record highs. Why? Because the exchanges simply cannot find enough bars to deliver. When someone exercises a futures contract and demands physical delivery, there have been delays, there have been complications, there have been questions about whether the metal actually exists in the quantities claimed. This is creating a crisis of confidence in the paper markets and driving even more people toward physical ownership. So, as we watch the tickers today, as we see silver moving up and down by dollars in a single session, realize that you are witnessing history in real time. The days of buying an ounce of silver for a double-digit price are numbered. Whether it happens tomorrow, next week, or next month, the break above $100 will be what some are calling the shot heard round the world. It will be the moment the masses realize that the dollar, despite its strength in forex markets, is losing purchasing power against real assets. It will be the moment they understand that real assets, tangible wealth, physical commodities, these are the only lifeboats left in a sea of monetary expansion and currency debasement. This is not just another rally in the precious metals market. This is not a temporary spike driven by speculation that will fade away in a few months. This is the transition to a new monetary reality. We are moving from a world where paper promises dominated, where digital ledgers and central bank assurances were enough, to a world where people want something real, something they can touch, something that has held value for thousands of years. Silver is at the center of that transition because it serves dual purposes. It is both an industrial necessity and a monetary asset. That combination is incredibly rare and incredibly powerful. If you have been waiting for the perfect time to position yourself, if you've been sitting on the sidelines watching and wondering when to act, I'm telling you to look at the charts right now. Look at the fundamentals. Look at the supply and demand dynamics. The window is closing. This might truly be the last chance to buy silver under $100. And when that barrier breaks, when we enter triple-digit territory, the entire conversation will change. The sentiment will shift. The momentum will accelerate. And the opportunity that exists right now in this narrow window will be gone forever. History will look back on January 2026 as a pivotal moment, just like we look back on 2010 and Bitcoin, just like we look back on other historic investment opportunities that seemed obvious in hindsight but were dismissed in the moment. The question is, will you be one of those who acted or one of those who watched? The countdown has begun. The final chapter of cheap silver is being written right now, and you have a choice to make.